How's it going, everybody, and welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy and number one sell setup of the day. Now, we put one of these videos out a few days ago on Saturday, but some things have changed, some things have stayed the same, but I know you guys enjoy these videos, so let's go ahead and dive on into another one. Before we get started with the top setups, we're going to take a look at two different things, starting off first with COT data. So COT data was updated on Friday around 5:30, so we have some new COT data to take a look at. However, a lot of it, again, kind of looks the same because typically these bigger moves take longer to develop. We can actually take a look at the latest weekly COT filing to see how things change week to week. And while that is super useful information for kind of figuring out how COT institutional traders' positions are changing on a weekly basis, again, it usually takes a while before you see big changes. Big changes usually don't happen week to week. But let's take a look first at our most bearish or most short assets when it comes to COT data, and it's still the Swiss franc, the Canadian dollar, and the Japanese yen, with the Swiss franc being the most short out of all of them, with 89.66% of open COT positions short on the Swiss franc. Open Swiss franc positions, I should say. Canadian dollar sitting at 86.41% and the Japanese yen at 80.73%. On the other side of things, we have, again, pretty much the same list up here. We have gold and oil topping the long side with 80.91% of open oil positions to the long side from COT traders and 84.37% of open gold positions to the long side from COT traders. Following that, we have the highest long currency, and it's the pound at 78.44%, followed by silver, and then the US dollar at 72.03% long. So there was a extended period of time here where the dollar was kind of sitting around 50-50. COT was very neutral bias on the dollar for a while, but in the last 2, maybe 3 weeks, that bias has shifted here to the long side on the US dollar from institutional traders. Now, speaking of that weekly change, we can take a look at weekly COT filing, and I'm going to break this down for you guys really quickly. So here we see our biggest changes to the long side and to the short side, with the long side here at the top, our biggest net change percentage being the Nikkei at a 8.87% change, and the New Zealand dollar is the most shorted weekly change at a negative 11.41%. Now, in case you're a little bit confused about how, for example, the Nikkei here says that it has an 8.87% positive change, but we see that they took away 1,954 long contracts, and they also took away 4,673 short contracts. Well, clearly they took away more short contracts than they did long contracts, so overall that would be a long or kind of bullish, momentum for the Nikkei in terms of institutional positioning. But the reason that the net change percentage is so high is because of the number of contracts that we have here. You can see that the number of contracts open on the Nikkei compared to the Russell is so much smaller. There is only a roughly 9,000 contract difference between the short contracts and the long contracts here, so it's not quite as diluted. So when there's changes like this, like a 3,000 contract difference here, it is going to make more of an impact than, say, something like the Russell, which had 34,289 long contracts open and 14,000 short contracts open. Now, that is a significant difference, about 20,000, just over 20,000 difference in contracts added between the long side and the short side. But we also see the number of long and short contracts open is much, much higher. It's roughly, a difference of there's like roughly a difference of 47,000 contracts here. So there's just so much more going on here that it's going to dilute this change a little bit, although it is still a very high positive change here at 8.51%. Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups,
pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
Now, on the flip side of things, when we take a look at the New Zealand dollar in that big 11% percentage here, we see that they took away 7,210 long contracts off of the New Zealand dollar. Those were closed, whereas they added 6,141 short contracts. And the total number of positions open right now is, again, much smaller than what we see here with the Russell. So lots of long contracts getting closed, lots of short contracts getting opened. You know, relatively speaking, not a ton of contracts open on either side. So that is why the percentage is so much higher, because it's not diluted with so many open contracts at the moment. Now, another interesting thing here is that we can see that the total number of long contracts is still higher than the total number of short contracts. In fact, when we look at the overall percentage of long contracts compared to short contracts, we see that overall the New Zealand dollar is still just barely hanging on, up over 60% long. However, what it makes this chart in particular so interesting is if this keeps up in another week, if we see another massive closing of long contracts and another massive opening of short contracts, then it is clear that COT is shifting their position away from the long or away from the bullish side, and they're becoming much more bearish on the New Zealand dollar or any asset that happens to look like that for that matter. So that is how you read that chart there, and I'm going to go ahead and move on into retail positioning. So let's start with major currency pairs first. These are our US dollar pairs, and we score this with a contrarian signal. So what we're taking a look at with retail positioning is what day traders, what the overall crowd of traders is long or short favored on. And typically the crowd typically gets it wrong. So whenever they are favored up above 60% either on the long side or on the short side, we are giving that a contrarian signal. So New Zealand dollar, Aussie dollar, and the USD CHF crosses here are up above 60% long, so that is a bearish signal for us, whereas pound dollar and USD CAD are above 60% on the short side, and that is a bullish indicator for us. Let's take a look at minor currency pairs next. So we have a whole big list here. All of these here are favored up over 60% on the long side, with Euro, Pound, and NZD CHF at 92% long from day traders right now. So all of these are giving us bearish indicators, and all of these down here are up above 60% on the short side of things, so that is giving us a bullish indicator, with Pound New Zealand at 95% short from day traders. Now, to finish off, we're going to take a look at the rest of the list. I'm going to add indices, metals, crypto, and commodities in here. And when it comes to this area of the market, there is a lot of long bias in terms of day trader positions. So day traders are long things like platinum, oil, iron, silver, the Russell, and the Nikkei, but they are shorting the S&P 500 here. So with that, let's head back on into top setups, and I'm going to remove any neutral biases that we may have and leave us with our bullish and bearish biases. So still a pretty solid list of things to take a look at here, with two currency pairs here topping the very bearish bias chart. We have Euro NZD and Aussie NZD, both with scores of +9, and CAD JPY is our one lone very bearish bias with a score of -10. Now, I did do a video on this on Saturday, so I think what I'm going to do, we took a look at Aussie NZD and we took a look at CAD JPY. So to keep it a little fresh and not just do the same thing that we did just a few days ago, let's take a look at Euro NZD instead, and we'll take a look at CAD CHF. So let's start with our very bullish bias. We'll start with Euro NZD. I'm going to head into data scanners, Forex, and find Euro NZD right here at the top of the list. And here we go. So Euro NZD has that very bullish bias, score of +9. COT data is a score of +2, and retail sentiment a score of +1. So right up top here, we see that the euro in terms of COT data is pretty much 50-50. It's really not leaning too heavily one direction or another, but their weekly change was pretty positive. And then of course, on the New Zealand side of things, we know that their weekly change was really negative. However, they are still sitting technically on the long side when it comes to the New Zealand dollar. Retail sentiment, on the other hand, shows that 87% of retail traders right now are shorting Euro NZD. Seasonality is a score of +1, but we can see that over the last 10 years averaged together, it is completely neutral. And in fact, because it's so neutral, why don't we check out the seasonality scanner that we have here to break it down a little bit further. We'll take a look at month of the year trends, and I'll find Euro NZD in here so that we can see how it's actually trading this year. And so here, so in the month of July, over the last 10 years averaged together, it is flat. But we see that this month, it is trading much higher than it normally does. Heading back on into Forex, we can take a look at trend reading now. Trend reading has a score of +2, and to take a look at that, we're going to check out the price forecast page. Price forecast gives us a look at the daily chart. We can actually see how Euro NZD has been trading over the last few weeks, and it's going to give us a forecast of where it could be heading next. So here is the Euro NZD chart. We can see that ever since early July, about July 10th, this thing has pretty much been in an uptrend for the past 2 weeks or so, and price forecast is predicting that that continues to be the case. Finishing up here with our fundamental data, we have GDP with a score of -1, same with interest rates. Retail sales is a score of -2, and then manufacturing PMI is a +2 score, services PMI a +1 score, inflation and unemployment rate both +1 scores, and employment change a +2 score. Now, to take a look at this data, we have simplified it by just showing you whether or not the GDP data, PMI data, anything here on the fundamental side, did it meet, did it beat, or did it miss the forecasted number? So GDPA here would be the first currency pair listed, so that would be the euro. GDPB here would be the second currency listed, so that would be the New Zealand dollar. And I can see that the euro just met expectations, so probably not a big move there because it didn't miss or beat the forecasted GDP expectations. But in New Zealand, it did beat the forecasted GDP expectations. So neutral here, but a beat here is giving us our -1 score. We see something completely different when we're taking a look at manufacturing PMI. We see that the euro beat manufacturing PMI expectations, whereas the New Zealand dollar missed manufacturing PMI expectations. So that is giving us a +2 score here. We see something similar with services PMI. But if you want more detailed breakdowns about GDP, about PMI, retail numbers, or employment change, any of that, all of that has much more detailed breakdowns here in all of these fundamental breakdown pages. That's something that we do really well here in the Edge Finder, is give you super in-depth fundamental breakdowns for pretty much everything that you could want to look at. There's tons of charts backing data that goes back years and years, and you can look at it in a number of different ways. But when we're in the just simple, quick Forex scanner pages, we're just trying to keep it quick and simple and show you why exactly it's getting scored the way it does. So retail sales here for the euro missed where they were a beat for the New Zealand dollar, so we have a -2 score there. We see that CPI for the euro here, score A. CPI for the euro came out as expected, so that's a 0 score, whereas CPI in New Zealand came out lower than forecasted and got a +1 score there. Employment change on the euro was actually unchanged, came out at 0, whereas employment change in New Zealand came out at -0.6. And the unemployment rate in Europe came out unchanged, whereas the unemployment rate in New Zealand actually rose 0.3%. So there is all the numbers and data backing up that very bullish bias +9 score on Euro NZD. And the other pair I said that we were going to take a look at is CAD CHF. So let me scroll all the way down here, CAD CHF. And CAD CHF has a bearish bias with a score of -8. COT data is a 0 or neutral score, and retail sentiment a score of -1. We can see here that when it comes to COT data, the Canadian dollar and the Swiss franc are actually our two most shorted pairs when it comes to COT data, so that kind of cancels each other out. And the weekly change for both of them was actually positive, not super positive, but a little bit positive. And so again, that's going to cancel out, and that's why we have a 0 or neutral score. Retail sentiment, on the other hand, with that score of -1, we see that overall retail traders are 85% long on CAD CHF, giving us that contrarian -1 score here. Seasonality, a score of -1. We can see that historically over the last 10 years, it does typically trade lower in the month of July. But since we took a look at it with the other pair, why don't we open up the monthly seasonality scanner and take a look at CAD CHF to see if it actually has been trading in that direction. And clearly it has. So in the last 10 years and in the last 5 years averaged together, actually, we see that July is typically a lower moving month for CAD CHF, and that has absolutely been the case this month as well. Heading back on into the scanner page, we see that the trend reading on CAD CHF is a score of -2. So let's take a look at the daily chart by taking a look at price forecast and finding CAD CHF. There it is. And there we go. So yeah, we can see that it's not a super sharp downtrend, although it does look like from July 15th to July 8th, it had a pretty sharp downtrend. But overall, in the month of July, this thing has continuously moved lower and lower. Price forecast predicts that that will continue to be the case. So we can finish up with our fundamental data. We have a GDP, services PMI, and employment change scores of -2. Manufacturing PMI is a +1 score. Inflation a +2 score. Retail sales and interest rate 0 or neutral scores. Employment rate a -1 score. So here we can see that GDP in Canada was a miss. It was a beat in Switzerland. Manufacturing PMI in Canada met, but missed in Switzerland. We see that it was met in Canada. Services PMI was met in Canada, but beat in Switzerland. And it was a miss for both Canada and Switzerland when it comes to retail sales. CPI in Canada forecasted at 2.6, but came out at 2.9. CPI in in Switzerland came out at 1.4, or was forecasted at 1.4, but came out at 1.3. And the employment change had a negative employment change in Canada at -0.14%. Also a negative employment change in Switzerland at -0.1%, and the unemployment rate ticked up in Canada 0.2%. It came out unchanged in Switzerland, right at 0, just completely unchanged in Switzerland. So there we go. There is all the numbers and data backing up all of these scores here, and that -8 bearish bias on CAD CHF. I hope you guys enjoyed the video, and if you are interested in getting the Edge Finder right now, starting on Wednesday, when this video is going live right now, the Edge Finder is actually 50% off. So if you enjoyed all the stuff that you saw in this video and you want to get this trading tool for yourself, you can find it in the links down in the description below or on our website, a1trading.com. And if you use the promo code A1YT at checkout, you can get the Edge Finder for half off for a limited time. So do not wait. If you are interested in getting the product for yourself and exploring all the other different tabs here that we have in the Edge Finder to help you with your trading to find better setups and more bullish and bearish biases, you can get it for half off right now. Promo code A1YT at checkout.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.